We are officially off to the races. The stock market open for trade. We do see fractional gains across the board. The major indices in the green. Pre-market, we had seen them moving between gains and losses. All of this coming as President Donald Trump is delivering remarks in Davos, Switzerland at the World Economic Forum. Joining me now with more is our resident expert, Eric Criscolo. He's a market strategist here on the trading floor for the NYSE. Eric, good morning.
Great to be here, Kristen. Good morning as well.
Okay, so let's talk about the market moves because we had seen investors a little unsure leading into the president's remarks, but now we're opening up in the green. What's behind that?
Yeah, so futures were trading a little lower actually in the pre-market, kind of waiting for Trump to start talking. He did. He was talking about a lot of things, pretty much everything under the sun. But once he mentioned that we still want to acquire Greenland, but we won't take it by force, that's when the markets ripped higher. The S&P futures gapped up, and that's what got us into the positive territory where we are today.
And of course, the president, as I mentioned earlier, is still speaking, so we'll see what other headlines come out of this. But I think it's fair to say this is a headline-driven market, right? Reminds us what it was like at the beginning of last year as well.
Yeah, well, you saw that coming into this week after the Martin Luther King Jr. Holiday. Trump had basically reignited the tariff tirade tantrums that he was known for last April, talking about issuing 10 to 25% tariffs on Europe, countries that didn't want us or blocked us from acquiring Greenland. So yesterday we saw the market sell off, pretty significantly. I think the S&P was down about 2%. So there was just, again, geopolitical issues, on top of Greenland and Venezuela and, Iran. Now it was new tariffs coming back. So the market just did not like that, sold off, and we finished down about 2%. Actually broke, I think, the 50-day moving average, so kind of a key technical level there as well.
Of course, these headlines transpiring out of Davos as we are in the midst of earnings season. Companies really starting to ramp up in terms of the number of firms in the S&P 500 reporting. Takeaways so far?
Relatively well earnings overall, solid. It's basically the financials that have been reporting, and they put up good numbers. The problem is, though, is that even if they put up good numbers, those stocks are selling off afterwards. Basically, what we're seeing is the hurdle rate is very high, and it's been getting higher and higher over the past 3 years as the S&P has climbed 80%. So now you're looking at the fact where the expectations are so high that there's no way that a company can beat them, right? Or to give investors what they're looking for. And so you're seeing that kind of immediate sell-off after even solid earnings happening. You saw it a lot in the big banks that report first last week, and now, as you said, we're kind of broadening out the new the other companies that are reporting now. Johnson & Johnson, being a major healthcare company, just reported today. They were trading lower in the pre-market, even on solid earnings. So that kind of dynamic is playing out right now.
I do want to talk about trade because one of the factors that the market is watching is this Supreme Court decision on tariffs. Where do we stand with that?
Yeah, we were hoping to get an opinion from the justices yesterday. It didn't happen. From the legal experts that I've been reading on, who have been providing all the commentary, the next decision is probably not going to happen until February 20th because of a recess and some other internal Supreme Court dynamics. So that's what I'm kind of under the impression of, from those experts, and the market still basically expects those tariffs to be null and void by the Supreme Court, although they've ticked up a little bit as far as what the prediction markets say, breaking in favor of Trump. It's gone from about 20% in favor to about 30%, so a little higher.
It's been a busy January. I think it's fair to say, right? And there are a lot of barometers within January, the first 5 days, the so-called Santa Claus rally that does encapsulate the first 2 trading days of January, and then collectively the month of January that we see. Amid these headlines, are the seasonals telling you anything in particular?
Yeah, it's very mixed right now. The January, I think we're about flat now, maybe a little about flat on the S&P 500 for January after yesterday and plus where we opened today. So, still to be determined. What you are seeing is a pretty big rotation within the sectors. Tech is actually underperforming so far this year. You're seeing sectors that really underperformed last year rising to the top so far in January. So the money kind of flowing out of information technology. although some parts are still strong, but flowing out of tech and into areas like materials, into areas like some of the healthcare names, industrials, and so consumer staples as well, a very defensive name or sector. So we're seeing kind of investors reconfigure how they're deploying capital right now in the early part of the year. Something to look out for, because the S&P might be trade flat, even though most of the sectors and most of the stocks are actually significantly higher if those mega caps don't outperform.
All right, Eric. President is still speaking, so we'll wait to see what other headlines, of course, come out of Davos, Switzerland, the NYSE on the ground in Davos at the World Economic Forum as well. That's Eric Criscolo. He's market strategist for the New York Stock Exchange. Thanks.
Welcome. Thank you.